Hi, my name is Khleif, and I'm the host of the Lifetime Cashflow Through Real Estate Investing podcast. And every week I interview multifamily rock stars, and we talk about how they've built incredible wealth for themselves and their families through multifamily properties. So hit the like and subscribe buttons to get notified every Monday when a new episode comes out. Let's get to it. Welcome to another edition of Lifetime Cashflow Through Real Estate Investing. I'm Khleif, and I am thrilled you're here. And I know you're going to get value from the young man I'm interviewing today. His name's Lior Rozhansky, and Lior's in Boston, and he's the founder and president of Floral Capital. Must like flowers. Okay, Floral Capital, love it. And he's in, believe it or not, $30 million worth of assets in Boston. And I asked him how many units that was, and it's only about 80 or 90 because Boston is expensive. So we're going to have a lot of fun talking about how to invest in an expensive market. Welcome to the show, brother.
Thanks for having me on here. I'm a huge fan of the show. Been listening to it for years. It got me going. So I can't tell you how excited I am to be on here.
Oh, that's very kind of you, my friend. You know, just shows how old I'm getting. That's all it is. But thank you. So, take a minute and just give us a little background on you, where you came from, maybe what you did before real estate, why real estate, and just give us kind of an overview, buddy.
Sure. So for me, it's a classic immigrant story. We immigrated here from Israel, as I was telling you before. My parents always had the dream for their son to be a doctor or a lawyer. So I did pre-med in college, graduated, did kind of took 2 years to do a management consulting gig while I was applying for med schools. And it was really during that time when I was in management consulting, working 60, 70 hours, just doing everything under the sun that light bulb went off for me, right? Like this is not sustainable. This is not really the way. So started doing my research into investing. And stocks and real estate came up. I realized I wasn't going to be the next Warren Buffett very quickly. So real estate was kind of next up, right? And just understood the numbers more than anything. The numbers seemed to pencil out to me. They made sense, and kind of bit the bullet right away. So a year after graduating, bought my first multi in a city right here, 10 minutes outside of Boston, and still own that asset today, actually. And then have been ramping up really since then.
Very nice. Very nice. It's funny. We have a lot of connections. So as I was telling you before we started recording, I actually lived in Israel when I was between 4 and 6 years old, off and on a little bit, spoke Hebrew fluently, spoke Arabic fluently, as well as a 6-year-old could. And I forgot it all, unfortunately. And still have family in Jerusalem. My brother was born in Jerusalem. My brother Albert was born there. And then you're talking about Boston. My dad lived there for decades, lived in Worcester. I think that's pronounced correctly.
That's a good way to say it.
Yeah. And so, I've got a lot of memories of Boston and the area, know a lot about the area, really enjoy the area. So it's kind of cool to talk to you about this. So, talk about what it's like to invest in a high dollar market like Boston, because this will resonate with people in LA, New York, some of these crazy high markets that are, higher than the markets. We're in high markets. I mean, Texas is going crazy, Phoenix is going crazy, Florida's going crazy, but it doesn't compare to your backyard. So talk about your backyard.
Yeah, it's a different ballgame here, right? I mean, our average price per door here is anywhere from $350, $400 up to $600 and higher, and that typically buys you, early 1900s products that hasn't been touched in 100 years. So it's certainly a different ballgame, right? I mean, your cash flow structures look completely different when you're buying these kind of price per door units. So it's a little bit of a different mentality too, right? Because a lot of investors are obviously, the first thing we get taught about with real estate investing is cash flow. Right. But that's not necessarily the driving returns, right? It's a lot, really create wealth in these really high price markets. A lot of it is investing strategically in the right markets, in the right neighborhoods, really knowing the market in and out, and then having a good business plan of how to create additional value, through construction, stabilization, and so on.
Wow. Well, I have to tell you, I'm going to push back on you a little bit. Okay. And I'm going to push back just because of what you said. And I don't want it, because that business model you just described is, frankly, for the uninitiated, extremely risky, because cash flow is everything. And so if but you did say it properly. You need to know your markets inside out. You need to have a great business plan. I have people that call me and say, listen, I can buy this property for $3 million, sold for $5 million, 3 years ago. And I say, I don't care what it sold for. It's irrelevant. What's the cash flow, especially in what's coming? I think we're headed for some pain in this. I know we're headed for some pain in this country, and we're going to see rents. In fact, I just got an article this morning. Rents this last month pretty much flatlined. I don't want to turn my Outlook back on because it'll beep, but I literally just got rents flatlined this month. And we've seen 20-25% rent increases on an annual basis, which is just staggering, 30% even here in Tampa. And so, but what you just said can work if the market can dictate it. So you buy, and your business model is basically buying right, repositioning, doing a value add and you told me you spend upwards of how much per door sometimes on the reposition?
50 to 100. 50
to 100 grand a door. Okay. That's crazy. And so, those are major rehabs. So you're not really buying to flip, or you're buying to hold, but you're factoring in your ultimate exit in your returns. You're not relying on the cash flow. Now, are you raising extra money to cover any deficits in cash flow in your hold period?
Yeah. So let me, first of all, I love the pushback. I'm glad someone's,
all right. Well, because I don't want my students to think, cash flow is not important. Cash flow is, in fact, I wrote a best-selling book called How to Create Lifetime Cash Flow Through Multifamily Properties. The subtitle is The New Rules of Real Estate Investing. And basically the new rules are focus on freaking cash flow, period. Okay. Cash flow will get you through a downturn, which we're headed into. So anyway, welcome to debate this with me.
I love this. Okay. And I actually read the book, so I'm very familiar with the concept. So let me first clarify and address. So first of all, we don't buy anything that is cash flow negative or breaking even, right?
Okay.
That's rule number
I made an assumption. That's what you do.
Yeah,
they have what's called negative gearing in Australia, okay? Where you buy a property and it doesn't cash flow, but you're buying it because of the increase in value. And that just makes the hair on the back of my neck stand up. I'm sorry I interrupted. Please continue.
That's okay. No. So yeah, definitely 100% on the same page about that. We don't speculate. We don't buy anything that's bleeding because as you said, you can't hold on to it, right?
Right.
So our strategy, what I meant by very limited cash flow. If you go to, I've looked at underwriting in the Southeast, Southwest, right? All those markets, a lot of those assets can produce, say, anywhere from 5 to 7% cash on cash yield, right? Maybe a little bit higher depending on the asset.
We got a deal at 8 to 10% right now in Nashville. We're raising money on, but anyway, okay.
Yeah, so or even higher. So we typically, our underwriting here is typically anywhere, I would say, the 4 to 6%. Right.
Gotcha.
So, we're significantly lower. We're certainly not bleeding every month, but we are significantly lower. Now, the reason why I say I don't think cash flow is not important, it's not the cash flow is not important to me. What we're playing here is an NOI game, right? It's strictly an NOI game. Mm-hmm. And I actually think there's a lot of, I'll push back on you a little bit. I actually think there's a lot of safety in investing in these kinds of markets, especially with what we're going towards, because the markets we're buying here in Boston, right? Or if you're buying in LA or New York, right? These are hubs, and these hubs are much less likely to get impacted by any sort of financial issues, right? Inflation's crushing most Americans today. The tenants we're renting out to in Boston, in Cambridge, where you have Harvard University, MIT, all these areas, these are typically more blue, higher end tenants,
white collar,
right?
White collar, they're not blue collar. Yeah.
Yep.
Yeah. Well, let me say this though. I agree with what you said about your tenant demographic for sure. But that said, I'm going to tell you, some of these high markets, valuations can plummet overnight. I saw it in LA. Okay. When 08-09 happened, LA was one of the ground zeros for this. Massive reductions in value. I don't know what happened in Boston, frankly. I wasn't in tune with that market. Do you know what happened in the crash in Boston? How did it fare?
Boston was incredibly resilient.
Resilient. Okay.
Yeah. So, markets like Cambridge around here, they dropped a handful of points, if any. Okay. Rents held up. So there's just there's actually a lot of safety in going to a market like this.
Got it. Well, there aren't a lot of markets like that. In fact, I wouldn't even in that vein compare it to LA, because I can tell you, California goes through these price fluctuations that are insane. We won't even talk about the political component, but anyway, okay, well, and so 50 to 100 grand a door. So do you have like a general contractor as a partner? Do you talk about your team a little bit, because that's a very sophisticated business model.
Yeah, I mean, look, if you're going to go and play in an area like this, you got to have your operations down. There's no question about it. So the way we structure it is we don't have we don't have a partner that's a GC necessarily, but we do have a crew of different GCs that we.
How about an architect? Is there an architect on your team, or you just sub all this out?
Everything is subbed out, so no one's internal, but those are architects, key players well. But when I say these high numbers too, what's crazy is a lot of people think that we're shifting moons here at 50 to 100,000, but the truth is at $50,000, that's kind of like an average turnover here. That's going to be a nice new kitchen, a nice new baths, floors, paint, some electrical plumbing. It's just a very, very high price market.
That's crazy. Right? That's 10 grand in an asset in Texas. That's crazy. Well, I don't understand. Is it because you're dealing with the age and the ramifications of the age? I mean, you see some of these antebellum houses, the windows have, ropes and weights and stuff like that. Is that what we're talking about here? Or is it just the cost of doing, the cost of that sort of work in Boston is just exponentially higher? Is that it? Is it the labor force? What is it? Why is it so expensive?
It's the labor. Yeah. I mean, certainly there's more complexity with buying buildings from the early 1900s. Obviously, there's a lot more sensitivity behind the walls. But no, I mean, labor here is just incredibly expensive. Cost of living here is high. Yeah. Yeah.
Okay. Wow. Very interesting. Very interesting. So what is a typical size asset that you're buying in that market? Is it plexes? Is it 5 units, 10 units, 2 units? What is it typical? If there is a typical, I don't know.
Yeah. So Brett, the thing about the Boston market is there's not a lot of huge buildings here, right? So whereas you can go in the South and find 200 unit building apartments, here, like a 30 unit building, 40 unit building is considered to be a pretty large building. That's a big
one. Yeah. Yeah.
That's a very large building here. So right now our average product has been anywhere from 3 to about 15 or so, and that's very bread and butter, what you can find all around the greater Boston.
Do you syndicate them even that small? You syndicate a 3 unit? I mean, do you syndicate something that's, and do you do deal specific syndications, or do you do funds? How do you do it?
Yeah, so it's interesting. When I first started out, we did by deal syndications. We did raise, we raised for everything. This year, at the beginning of the year, we actually raised our first fund. Put together a bunch of equity, and then essentially went on a shopping spree.
Nice.
So that model worked out great. We were able to buy, again, bread and butter product at discounted because we had the equity lined up, ready to go.
Yeah, you could offer cash and quick close and all that. Okay. So let me ask you this. I have a lot of aspiring investors like you were when you first started listening to my show. Knowing what you know now, Lior, what words of wisdom might you share with them? What path, what strategies might you suggest for someone that hasn't taken action yet? I mean, I don't know about you, buddy, but I believe we're headed in some incredible opportunity in this country. I really do. I think everything's going on sale. And, if you listen to my podcast, you start to, hear the men and women that own, 4, 5, 6,000 doors. They almost all started in 9, 10, and 11, and 12, and I like to think that's a clue. And so, but I kind of bounced around a little bit there. But what would you say to someone that hasn't taken action yet? What advice might you give them?
Yeah, the big thing I think is get really good at one thing first. Yeah. Right. Don't scatter yourself. So I started playing the Boston market. I learned it really, really well. I kind of started carving out these niche where we can start to look at projects that are heavier value adds. And I just got really, really good. And, now I can do these projects in my sleep. Right. Right. And I think that's where all the opportunities can come. Cause I agree with you. I think I'm seeing it in Boston, especially too right now. I mean, there's going to be blood in the streets pretty soon. Oh yeah. There's a lot of people that did not structure deals properly. A lot of developers that put up product that's not moving.
Bridge debt's coming around. Yeah.
Oh yeah. I've already gotten those calls. So I'm seeing that everywhere. So there's going to be opportunities going to be everywhere. The question is, can you execute, right? And if you're a man of many talents and you're going to be in 5 different markets with no real team or expertise in any of them, that's going to be tough, I think, right? I think if you can really hit your ship down, really get your crew, really know what you're doing, I mean, I think you'll be able to crush it.
Yeah, well, I agree completely. I've got actually a virtual boot camp coming up here on the 15th and 16th of October. And I'm telling people, man, now is the time to get up to speed. Don't screw around and wait, because once we're in the thick of it, it's really going to be too late. You have to build relationships. You have to make connections. You have to, learn how to underwrite deals and everything else. So what role, do you have a team? Is it just you, or do you have a partner or two?
Yeah, so right now it's just me and a partner.
Okay.
We have obviously we have our GCs and architects.
Right.
They're not.
But I mean, internally, it's you and one person.
Internally, right now, it's me and one person. We have an assistant.
Right. But what role do you play? What role do you play in? I'm sorry to interrupt. I'm so bad at it. Forgive me. What role do you play in the team, and what role does your partner play? Do you do the same things, or do you divide and conquer?
No, we definitely divide and conquer. So I'm definitely much more on the operational side.
Mm-hmm.
So I do a lot of management of our construction, property management, really make sure our ops are working, and really hammer those out. And what I was going to say just before too is we have explored, starting to really build out the internal team. We've had interviews for W-2 positions, especially on the construction and operational side, because that's where all of our money is made.
Not now.
I know we've gone back and forth.
Not now. Keep that overhead low right now. Conserve cash right now. Get into as much cash as you can and access to as much cash as you can, because cash is king in what's coming, and you do not want to squander it building this nice office with a bunch of employees. It's time to get lean and mean right now. And so, I'm glad to hear you didn't pull the trigger on that. So does your partner, is he more on the acquisition side, analytics side? I'm just curious, because, guys, when he's saying, when he's answered the question to you, those of you that haven't taken action yet, become really good at one thing. There's lots of different hats you can wear in this business. You can be the person that finds the deals and underwrites them, or just finds them. You could be, of course, if you're analytical, you can underwrite them. If you're process driven, like Lior is here, and maybe have some project management experience or construction experience, or just management experience in general, you can asset manage. You agree with me here, Lior?
Absolutely, yeah. So just to give you the listeners more context. So yeah, my partner's really good at acquisitions. He, we both do acquisitions, but he's good at that as well. He does a lot of the finance and accounting. He raises a lot of their equity as well. Really is the point when we're talking on to debt lenders. So, there's very defined roles, and exactly like you said, right? I mean, you don't have to be good at everything. If you can find a way to provide value in a couple of facets, I mean, that's huge.
Yeah. I have, I don't know, somewhere between 1,000 and 1,200 students at this point, and they own upwards of 90 to 100,000 doors. And I've only been teaching for 5 years. I'm super proud of that. But what I've discovered is most of those doors were done between my students, but my warriors, my mentorship students. And this business really is a team sport. So you just bring your superpower to the game. You align with a team that's maybe done it already for your first deal or two. And maybe you date before you get married. But that's how this business is done. Lior, everybody thinks, that all they see is the success. They see 30 million in assets. You're obviously a very intelligent, driven guy, but talk about some setbacks. Talk about when you got your butt kicked, your nose bloodied, whatever, and maybe some lessons involved. Pick a doozy or two, will you? Because we have them, we've got them. We've all got them. I mean, almost every day, it seems like sometimes.
I could write a book on it. I guess one of the good lessons I learned was actually after I bought my very first property. I thought I was kind of a genius and decided to hop into the development game for a little bit. So I actually, in 2017, took on a few development projects in Boston, and quickly learned that it is a totally different ballgame, right? It is completely different. I partnered up with a developer that I thought would help steer the ship. Everything just worked against me, basically, is how it went. And I really learned, right? Like, again, it's what I've been saying the whole show is get good at something, right? Don't go bouncing from like rentals to condo developments. Just get good at a couple of things and really hammer those out.
Or even shifting asset classes. You've got to, every asset class has its own nuances, idiosyncrasies. And so if you're going to do multifamily, do freaking multifamily. Don't say, okay, maybe I'll throw some self-storage and some retail in here. No, become really good. So I really like that you said that, especially in what's coming. I will tell you, generalists get their butts kicked. You need to be a specialist. Okay. And that's what you're talking about right now. So do you have a family? Are you single? Tell me personal.
I have a girlfriend.
Okay.
Yeah.
How old are you? How old are you, Lior?
29.
29. Okay. Good for you, man. Good for you. That's freaking awesome, brother. So let me ask you this. Is there anything you'd do differently if you went back and told 18-year-old Lior what you know now? Tell me if there's anything you would change. Would you stick with what you're doing now? Would you enhance it? Would you go bigger? Anything come to mind when I ask that question?
Yeah, it's a great question. I would say 100% scale quicker, right? Yeah. I bought my first building when I was 23. And over the next 2 to 3 years, we started doing deals. Like I mentioned, the condo development, that obviously I wish I never did that.
Yeah.
But even when we started doing the first couple of syndications on the multi side, we kind of took it slowly and did one by one. But looking back at it, right, it's like everything gets better with scale, and the more you do it, and the faster you go through it. You kind of learn your lessons quicker. You know what you're doing. You increase your network faster. So if I could do it again, I mean, I wish I was at this phase when I was like 25, 26 instead of a couple of years later. So
I feel you. I think I get the same answer every single time, which is why I ask it, because people are like, should I start with a duplex? I'm like, fine, start. Okay. And then you'll I ask the question, everybody always says go bigger, faster, and scale faster for sure every single time. And that's why I ask it. I don't want them to hear it from me. I want them to hear it from my guests. But, I know that, we talked about this offline, that you had mentorship, and did you find value in the fact that you had a mentor to help you through this?
Yeah, and I'll say this about mentorship. I mean, I think you can have multiple, and they'll be throughout the phase of your career too, right? I mean, every time you're in a different phase of your career, you have a different person that has been there, has done that, and can provide the right insight.
Yeah, good answer. Yeah. No, I love it. Were there any epiphanies on this journey for you? Any like aha moments where like, okay, now I get it. Well, obviously around the development, you had one, like, okay, knucklehead, get out of this and go do what you're good at. But anything other than that?
Yeah, I mean, I think one of the biggest shifts in my business has been the last 12 to 18 months. So when we first started out syndicating in Boston, we kind of went after like the transitional, I would call them more class C, maybe lower class B markets. Mm-hmm. And over the last 12 to 18, maybe 24 months or so, I've kind of made it a real pivot to the class A locations in Boston. So instead of going after those transitional markets, I've been going after the core markets, right? Going after, the best locations. And that was a real changing point in my, because when I was first starting out, I always thought like, investing downtown, that's kind of left for the elites and for those people that have excess cash. But once I started looking through the financials and looking at more deals in these premier locations, I realized, hey, like I can go do the same thing I'm doing in these markets and just take it to these more stronger established markets and do the same thing. And that was like a huge moment for me. I remember doing my first building in an area like this, and I was like, I can't believe we're doing this. Like this,
that's cool.
I don't have any business. Yeah, I don't have any business
it's
buying
pretty,
here.
Pretty freaking cool. When you take it, it's you plateau, you go to the next level, Who knows? Maybe you do high rises here next, so there's always another level. And I love it. And I will tell you, I think the C minus assets are going to have some hiccups over what's coming. I mean, good God, with inflation and gas and everything else, people, there are 20 million families in this country behind on their utility bills. I couldn't believe it when I saw that. So do you have any favorite quotes that drive you or any things that help inspire you? How do you, have you done your goals? Do you have vision boards? Do you do anything to keep you juiced? Tell me about that.
Yeah. I mean, goals I do every day. I have my daily planner. So I get those down every day along with my, my 5 key to-dos. I'm not, I've tried the vision boards and I've had my coaches tell me to do them. Honestly, for me, I think once you have an ingrained mission, like it just clicks. You know what I mean? Like I don't need to look at I don't need to look at a red Ferrari or whatever it is every day. Like I get, I kind of get my purpose. I know what I want to do. And, for me, it's almost like it's like a sport, right? It's like, how can you be elite? And that's honestly, that's what drives.
Oh, that's a good answer. That's a good answer. And that says you're competitive and you're basically transforming that energy into this business. And that absolutely works. Fair enough. Well, listen, brother, I appreciate you coming on the show, adding some value. And as I told you, I'm up to my eyeballs today, so I'm gonna need to cut this off at this point. But it's very much a pleasure to meet you, and I appreciate the kind words about the fact that you've suffered through a few of my podcast episodes in the past. Anyways, it's great. It's great to meet you, my friend. I'm sure we'll stay in touch.
No, you do great work. I hope you keep doing it. It's fantastic, and it was an honor being here. So I appreciate it.
Very kind of you to say, buddy. Thanks. We'll talk to you later. Thanks.
Rod, I know a lot of our listeners are wanting to take their multifamily investing business to the next level. Now, I know you've been hard at work helping our Warrior students do just that using our ACT methodology, which is awareness, close, and transform. Can you explain to the listeners how they can get our help?
You bet. Guys, we've been going nonstop for 3 years, building an amazing community of like-minded people. And our coaching students, which we call our Warriors, have had extraordinary results. They've purchased thousands and thousands of units. And last year, we did over 1,000 units with our students. And we're looking to grow this group and take it to the next level. We're looking for people who want to follow a proven framework that's really step by step and then leverage our systems and network to raise equity, to find and close deals, and to build partnerships nationwide. Now, our Warrior community is finding success in any market cycle. So if you're interested in finding out more about how you can become more of our incredible network and take advantage of the incredible opportunities that are coming very soon, apply to work with us at mentorwithrod.com or text CRUSH to 72345 and we'll set up a call so you can check us out and we can check you out. That's mentorwithrod.com or text CRUSH to 72345.